Okay, time is 7 o'clock and good evening, ladies and gentlemen. Thank you for joining us today for today's Corporate Connect session. I'm Sunny, your host for today. And this evening, we are very excited to welcome IHH Healthcare as well as our audience from the Mumu Live platform. This Corporate Connect session is proudly organized by SIAS and supported by SGX Group. We will kick off today's webinar with the latest market highlights from Mr. Geoff, Howie, Market Strategist at SGX Group, followed by a corporate presentation by IHH Healthcare Management, Mr. Dilip, Group CFO of IHH Healthcare. IHH Healthcare is a global leader in the healthcare industry with a mission to improve life through its network of hospitals and clinics. With a large team and a focus on patient care, they offer a wide range of services across multiple countries. Their goal is to become the most trusted healthcare provider worldwide by partnering with stakeholders and prioritizing sustainability. But first, let's welcome my good friend from SGX, Mr. Geoff Howie, to share with us the latest market highlights. Over to you, Geoff.
Thank you so much, Sunny. Can you hear me okay?
Yes, we hear you.
Okay, brilliant. Okay, thanks. I'll take 10 minutes or so. Just a timely reminder for these presentations. In fact, most presentations, if not all presentations, they use general information. It does not take into account individual investment objectives, your financial situation or needs, obviously. And I guess this disclaimer also does serve as a reminder that investment decisions should, of course, be informed by a financial advisor, and reliance on the material is at your own risk. And of course, past performance is not a reliable indicator of future performance. So I guess it's been a while since I've had the pleasure of being on the SIAS webinar. So I just wanted to remind everybody of that, of course, and straight to it. A quick overview for these 10 minutes. I just want to provide a very quick outline of our SGX IHH Healthcare Index. I want to discuss very quickly the types and traits of healthcare stocks that we have in that index, and also discuss some of the recent performances of the heavyweights of those index. So straight into it, this index, it's the indicative IHH SG All Healthcare Index. It's comprised of 30 stocks actually more than 30 stocks, between 30 and 40 stocks actually. And it's market capitalization weighted, and it tracks the performance of the listed healthcare stocks in Singapore. It has actually generated a 9% return in the year to date, very much like the STI. But if you're following the STI closely, you also know that those gains have been somewhat uneven, i.e. it's the heavyweights which are driving the returns, and you've actually got a similar number, if not more, decliners than advances in the year. So for the healthcare index, it's really been on the back of the three current largest weights of the index that have also ranked among the strongest performers within the index in the year thus far. So for the year, when you're looking across the healthcare index, you've got 2 decliners for every 1 gainer. And I guess this very much aligns with what we've also seen globally. 200 plus members of the FTSE APAC index that represent the healthcare sector have actually lodged median declines of 12% in US dollar terms. So there's a few challenges associated with the sector, of course, overarching challenges which affect other sectors as well. But what we got to do is just look at, I guess, what are the actual intrinsic drivers of the sector, and to do that, it's good to look at the actual stocks that are involved. So healthcare stocks, they include obviously providers of hospitals and clinics. They include medical technology providers, medical equipment providers, medical supply providers, the personal protection equipment and rubber gloves, for instance, pharmaceutical providers. It includes traditional Chinese medicine providers, and of course, real estate investment trusts that are investing in healthcare related properties. The uneven, or I guess you could call it asymmetric performances across the healthcare industries and stocks, it's not just, I guess, been observed this year. It's been observed really since the end of 2019 in both our local market and the global stock markets. For instance, since the end of 2019, the IHSG All Healthcare Index, this index has generated an 11% annualized total return. However, the asymmetrical, the uneven returns are really evident because if you look at 11 of the current 20 largest weights of the index alone have generated positive total returns over that 4.5 years. And I guess if you reverse it, so you look at the actual 20 largest weights of the index as of the end of 2019, then it's 7 of those 20 that have actually booked the positive total returns. And in over the interim, you've had 3 actually delist. So I guess the key point I want to make is that whether you're looking at Singapore, across APAC, or even US healthcare stocks as well, there has been a significant difference between the leaders and the laggards in the recent years. And I think that's an inherent trait of the sector due to the select opportunities that come with, I guess, its innovation or abilities to ramp your scale versus, I guess, the challenges of cross-border regulations, the overarching themes of increased costs of living, tighter financial conditions, and the global moves to secure strategic supply chains. So you have a number of supply and demand drivers in there, which at the moment are having an impact on the sector. And I guess on the more longer term structural side, the healthcare sector is, of course, often viewed as defensive. There's growth opportunities that are supported, of course, by the long-term demographic and social economic trends within the sector. And if you look at it from a REIT perspective as well, JAL's latest healthcare real estate outlook report did identify that healthcare-related assets do remain one of the most resilient commercial real estate sectors. I just want to hone in on this one because we actually have 2 real estate investment trusts that are investing in healthcare assets, healthcare property assets, Parkway Life REIT and First REIT. And Parkway Life REIT is among the largest listed healthcare REITs in Asia. I think it's a little over 60 properties in Singapore, Japan, and Malaysia. The combined portfolio, I know, is 2.2 billion Sing dollars. And its distribution per unit in its most recent quarter grew 4% year on year to, I think it was 3.79 Singapore cents. And that's for the first quarter of this year. And that's going to form part of the first half distributions, obviously, when the REIT announces its half year results after the close this coming Friday. Parkway Life's DPU, it has recorded a steady growth rate, I think, of around 130 to 135% since its listing in 2007. And this could be partly attributed, I guess, of course, as I said, to the defensive nature of its portfolio, as all its Singapore and Japan properties are fully occupied. Want to talk to the index itself, because as I said, it has had good gains, but like the STI, the gainers and the decliners have been fairly balanced. So when you're focusing on the 3 largest current weights of the healthcare index, that's Top Glove, Riverstone, and Tianjin Darentang Group, they've averaged 36% return so far this year. Top Glove's gains have coincided with the company reporting a return to profitability in its 3rd quarter, which ended in May. And the group has credited increased glove demand, enhanced quality, cost efficiency, and land sale gains for the recovery. For its 9 months, for the first 9 months of its year, the group posted sales revenue of 1.7 billion ringgit, which is marginally lower compared to the same period for FY23, but it also recorded a significantly narrow loss after tax of 26 million ringgit in the first 9 months of the year. That was a 94% improvement for the same period in FY23. So this company at Top Glove, its FY is completed at the end of August, and it started the year with a consensus estimate target price of 22 cents, which is now up to 29 cents. And I think the stock's trading around 35 or 36 cents. Riverstone Holdings is the next largest weight of the index. and its gains have also coincided with well-received earnings and upward revisions to its consensus estimate target price. For its first quarter of this year, which ended in the 31st of March, the net profit rose 55% year on year to 72 million ringgit, and that was its 5th consecutive quarter of growth. Now, if you can envisage the share price on a chart, prior to the results, the share price was at 77.5 cents, and the 12-month consensus estimate target price was at 83 cents, just a little bit higher. And the share price in the following session after the company reported first quarter actually moved up from 77.5 cents to 89 cents. The share price is now at 96 cents, and the consensus estimate target price is also around 20 cents higher at $1.04. The average daily turnover of the stock as well is up around threefold from where it was last year. So the stock has also been in play somewhat. Should also point out too that Top Glove and Riverstone, the rubber gloves, they have evolved, of course, from basic protective gear to, I guess you could call it, sophisticated technology advanced products that are obviously catering to a wide range of applications such as high-tech clean rooms. Now, for the third stock, that's the third largest stock of the index, apart from being among the strongest healthcare index performers in the year to date, it's actually been the second strongest performer in the index since the end of 2019. Tianjin Darintang, it's relayed that China's pharmaceutical industry has seen a significant shift in recent years. You've had an introduction and a big modification to various government policies and regulation. And those changes, they include enhanced scrutiny over medical insurance funds as well, rapid progress in drug procurement, optimization of medical insurance catalogs, and reforms to payment methods have also helped to provide a more efficient means to facilitate demand for TCM. So I guess just in summary, Top Glove, Riverstone, and Tianjin Darintang, they're currently the three largest weights of the index. And the three stocks have also booked the most net institutional inflow this year within the index, followed by IHH Healthcare. So IHH Healthcare, along with Hawpa and Parkway Life, are the next three largest weights of the index. So in conclusion, before Mr. Kadambi comes on, we should wish Mr. Kadambi a good happy birthday for tomorrow, because since its dual listing in 2012, which is 12 years tomorrow, IHH Healthcare, it has delivered annualized total returns of 5%, exactly in line with the returns of the Straits Times Index as of now. For the past 10 years, the stock is also ranked among the 10 best performing constituents of our IHH SG All Healthcare Index. That's IHH Healthcare. So over to you now, Mr. Kadambi. Thanks very much.
Okay, thanks, Geoff, for sharing the latest market updates on the healthcare sector with us. We will now dive into the corporate presentation by IHH Healthcare, Mr. Kadambi, the Group CFO of IHH Healthcare. Mr. Kadambi, over to you, please.
Thank you, Geoff, and thank you, ladies and gentlemen, for joining us this evening. First of all, I'd like to thank both SIAS as well as SGX for facilitating the session today. I'm very happy to be here. I am Dilip Kadambi and the Group CFO of IHH. What I'll try and do is try and keep the presentation fairly short. We will try and finish the presentation, I would say, probably in about 15-20 minutes, and give enough time for question and answers thereafter. So starting with the first slide, I don't know whether it appears on the screen for you all, but yeah, so just to introduce IHH. IHH, I would say, is in a very unique spot where IHH Healthcare is a truly global, diversified healthcare play. It is one of a kind. You do see a lot of hospital players who are national champions, maybe in some places even regional champions, but IHH is probably the only diversified global champion. Why do I say that? If you look at the map that is there on the screen, we have presence all the way from Netherlands in the west to Shanghai in the east. So we operate about 80 hospitals across 10 countries, and we operate over 12,000 beds. We also have very recognized brands, and we are market leaders in most of the countries that we operate. Some of the brands here you would know already. Gleneagles, Mount Elizabeth, Parkway are household names in Singapore. And likewise, Acibadem in Turkey, Fortis in India, Pantai and Prince Court in Malaysia are all household names which people are used to in all of these geographies. And each of these operations are market leader in its own rights. And as Geoff mentioned, we are listed in Singapore and Malaysia. And next 2 days, we would be completing our 12th listing anniversary ever since we got listed in 2012. So moving on to the next page, as you can see here, we are, our aspiration is really driven by, what this slide really states, care for good. So what does care for good mean? Care for good is really putting patients in the center of whatever we do, right? So we have grown year on year following this mantra of care for good, which means patient ahead of everything else. And then we look at patient in terms of quality of care, as well as sustainability in delivering the care to our patients across all the home markets that we are currently operating. So on the next page, what you can see here is, we've delivered very profitable growth over the last few years. 2023 is no exception. So if you look at our revenue, this is all ringgit denominated. We are at about 21 billion ringgit of revenue. And what is more interesting for all of you is, if you look at the growth on a year-on-year basis, we've delivered a double-digit revenue as well as PATMI growth. And further to our, our commitment to our shareholders to ensure that we enhance returns for our shareholders, we delivered a return on equity of 10.7% last year. We've grown that from a low single-digit base in middle 2016 to where it is today, and we continue down that path as we go along. Again, this relates to our dividend policy. As I mentioned, returns to shareholders are something that is very important to us. We've stated that several times in the past, and to keep in line with our commitment, what we did do last year was we enhanced our dividend policy from a minimum distribution of 20% to no less than 30% last year. We also have been increasing the per share dividend over the years from 3 cents not many years back to almost 9 cents last year. Plus, we also declared a special dividend last year because we had some cash which we thought would be better off in the hands of our shareholders. So the ACE framework anchors our care for good. So what does this ACE framework, what is this all about, right? We have built our strategy and our strategic pillars around the ACE framework. ACE framework is very simply align, challenge, and empower. Align to basically put, again, the center, put the patient in the center of everything, and align towards care, our aspiration for care for good, while looking at profitable growth. That is the A part of it. C is to challenge ourselves and challenge our organization to transform, to ensure that we future-proof the organization for tomorrow and to sustainable tomorrow, right? And E is to really empower. As the organization, in many organizations, as the organization grows larger and bigger, bureaucracy sets in, there is a lot of red tape. So E, empower, is really in terms of empowering our markets. As you can see, we operate in 10 different countries, and E is to empower our markets to really grow over a period of time and deliver shareholder return to our shareholders. That is the E in terms of empower. The ACE framework that we spoke about, is really outlined in terms of how we want to grow our business. At the same time, look at excellence in clinical care and healthcare leadership. So now let's talk about literally in terms of our growth plans, in terms of how do we intend to grow. I mentioned that there are 4 strategic pillars of growth for us. The first pillar of growth, as you can see, is to really organically expand. We are in the middle of an expansion plan. We are going to grow our capacity by almost 33%, which is about 4,000 beds. And as you can see on this slide, it kind of clearly lays out the areas where we are going to grow. Now, why are we going to grow so much? If you look at this slide, you can see that we're already at a utilization of 70% plus. In the healthcare industry, a utilization of 70% is very high. So, we have the ability to grow as we are leaders in each of these markets, and hence we have clearly laid out a roadmap in each of our markets to grow our capacity by 4,000 beds in total over the next 4 years. The second pillar of our strategy for growth is really around expanding in the healthcare continuum. What does this mean? Apart from just hospitals, serving our communities through ambulatory care centers, serving our communities through primary care centers, and being across the healthcare continuum is what we will do in specific geographies, especially in places like Singapore. You will have seen Parkway Shenton next to your neighborhood, or for that matter, you would have seen ambulatory centers like the Parkway Ambulatory Center that we have on Heron, on Orchard Road, right? So do more of that, really, in terms of growing the healthcare continuum. The third pillar is developing the labs, the laboratories, right? Laboratories is a key business for us. We are in the healthcare, leadership program where it's not just about delivering healthcare, but also looking at diagnostics. So from a diagnostic perspective, we already do about 100 million tests across all our hospitals. So how do we drive this to outreach? How do we drive this to the retail people who go to GP, right, or the specialist clinics? So really growing the laboratory platform is something which is important to us. The fourth pillar is really about our inorganic opportunities. IHH in the past has evaluated inorganic opportunities. We will continue to do so, but we are mindful that we will do these inorganic opportunities as long as they are value accretive to our shareholders. And that's a key criteria that we assess when we look at any inorganic opportunity. And look at some of the assets, like in any big company, there are certain assets that are probably not performing as we would like them to. So there is a lot of focus on turning around those underperforming assets and delivering shareholder returns on those as well. Now, talking about, IHH being one of the world's largest, healthcare service provider, we will embrace without doubt the sustainability agenda, and we have clearly laid out KPIs across our 4 pillars. Our 4 pillars are patient, people, public, and planet. So we've clearly laid out very detailed KPIs in each of these pillars, and what is it that we're going to achieve, over a period of time. You may already see that in the last 2 years, we put out a sustainability report, which tracks the progress across these 4 verticals. So this page further highlights some of the key KPIs that we've taken within the 4 of our sustainability pillars and what we've achieved over a period of time, whether it is patient, people, public, or planet. And we will continue to do so as we go along. So last but not the least, I would once again like to reiterate our ACE framework, where it really puts patient in the center of everything and focuses on patient care and excellence and of course clinical leadership. The second really is in terms of the sustainability pillars that we just spoke about and being a leader in achieving and taking leadership on those sustainability pillars. Last but not the least is to continue delivering shareholder returns. We've done that over the last few years, and we want to continue enhancing our ROE and total shareholder return over a period of time. With that, I would probably stop and for any Q&A that any of you might have.
Hey, thank you, Mr. Kadambi, for that insightful presentation. We will now move to the Q&A segment. So feel free to submit your question in the Q&A chat box. For our Mumu Live audience, you can also click on the link to join us in Zoom to post your questions. We endeavor to answer as many of them as possible. So let's proceed to the Q&A session now. We do have some pre-submitted questions before the program starts. Maybe we start from there first, Mr. Kadambi, before the question comes in from the live chat section. So one of the pre-submitted questions was the financial numbers of IHH Healthcare is actually in ringgit. So is there any concern on the depreciation of the ringgit?
So, that's a great question. Thank you for that. But, bear in mind, as I said, we are the most diversified healthcare group, across the world. What does it mean, right? It also means that we have 10 countries of operation, which means we operate across, various currencies. Singapore dollar, ringgit, Indian rupees, Hong Kong dollar, lira, and euro. So we have many currencies there, right? So while there's been some depreciation in ringgit, also bear in mind that it's only a portion of our revenues really come from ringgit, whereas we have all the other basket of currencies. So it is in a way diversified from any currency risk as well.
Thanks for that answer, Mr. Kadambi. So a lot of investors are very interested and want to learn more about IHH Healthcare. So do we have some estimated or breakdown of the geographical region where the revenues are coming from in terms of percentage-wise?
Sure. So if you look at overall, the biggest contributor to IHH is Singapore itself, both in terms of revenue as well as EBITDA. Turkey is the second largest contributor in terms of revenue as well as EBITDA. Malaysia is the third largest, neck to neck with India, which is soon catching up with Malaysia. And then, of course, you have Hong Kong, China, and the rest.
Okay, we do have a question from one of our members. Do you intend to open a hospital in Indonesia? Are you looking at the Indonesian market?
Sure. So, as our group CEO has many a times mentioned in the past, we evaluate various markets, right? And Indonesia and Vietnam are, adjacent markets, very close to where we are currently in terms of Southeast Asia. And these are markets that we constantly evaluate. We look at opportunities, but bear in mind these are exploratory, and we continue to evaluate. And before we go into any country, what is very, very important to us is to have a full-blown country strategy before entering a new market. We will not go in and build one hospital or two hospitals. There has to be a clear country strategy and a country growth plan over the next many years for us to enter some of these new markets.
Yeah, so a lot of deep considerations over there before entering a new market. We take one more pre-submitted question before we move to the live Q&A. And this last pre-submitted question is inflation has been a real problem in the last few years. So in terms of healthcare, the cost of treatment to the commoners, is IHH concerned about the cost of healthcare, and what's the outlook like on the treatment fees?
Yeah, no, look, I think it's a very, very good question. And not just us, right? But even the governments across the world are very, worried about the healthcare cost. Inflation certainly is not helping. The cost of healthcare delivery has been going up, whether it is staff cost, whether it is material costs, so on and so forth. IHH, as a market leader and a healthcare leader, we are very acutely aware of this. So we have various programs to ensure that we curtail costs, but at the same time also deliver value. For example, we have a program called value-based care, right, or value-driven outcome, as we can call it, right, where we look at given the fact that we operate in 10 different countries, we look at both clinical as well as consumption data across various of our countries for a specific surgical specialty to see the best in class, both in terms of cost and outcome, and see how is it that as a group we can emulate that, right? So, we have several programs, but absolutely cost is something which is something very important for us, and we continue to focus on cost management, over the last few years.
Yes, so indeed, the statement that you said just now, kept for good and really have the patient in mind to look at not only the treatment, but also the cost of treatment for your patients as well. So let's move to the live Q&A section where we have one question from our live viewers from LK Chua. What is IHH plan for its hospital in Singapore, given that foreign patient arrivals in Singapore has been dropping? Is that a sign that you are observing, and what are the plans for IHH to tackle this?
Sure. Thank you. Thank you, Mr. Chua. So if you look at our Singapore business always has grown strength to strength. The foreign patient revenue has always been somewhere in the order of, I would say, 17 to 20% over the last many quarters. And that continues to stay, right? If you look at our overall, Singapore business itself, what's really happened is our healthcare intensity or the acuity of care has gone up. What does that mean, right? The most latest technology of cancer care, of cardiology care, all of that is in Singapore, which means you do see anybody wanting high-end treatment, which is probably available in very few parts of the world, and it is available within IHH Singapore, they do come to Singapore. Example here being Proton Beam Center in Mount Elizabeth, Novena, which we just opened a few months back. And again, case in point being almost 50% of our patients for the Proton Beam Center are medical travelers who come from outside to seek treatment in Singapore.
Okay, thanks for the answer, Mr. Kadambi. We move now to the next question. I think it's from Ms. Srivasa, if I get the name correctly. He'd like to thank Mr. Kadambi for joining us today. And his question is, with IHH Hospital having many laboratories under the group, would it be possible to see a unification of all the IHH lab under one umbrella? And if yes, how will this affect IHH group as a whole? And why would IHH consider doing this in the first place?
It's a great question. Thank you. And the short answer to this is yes, we are already doing it. So if you look at our results, you will see a column which says the laboratories, and we announce the laboratory numbers separately, which means we've created a laboratory platform and we've put our laboratories on the laboratory platform already, right? Why is this important to us? We think there is a big growth in diagnostic and preventive medicine, not just within the hospital, but outside of the hospital setting as well. For example, when you go to your specialist center or when you go to your general physician, there are a bunch of tests that the specialist center or the general physician might ask you to do, right? So even outside the hospital setting, there is a need for laboratories. That's number one, right? Number two, there is also more targeted diagnostic capability that is being built across the world. And I'll give you an example of, let's say, genomes, right? Genome sequencing, genetic, diagnostics. So what, for example, in today's day and age, if let's say if you have tuberculosis, one can actually look at the kind of tuberculosis that you have and what drug would be best suited for you to ensure that you recover faster, right? So there is targeted therapy as well, which again uses a lot of diagnostic. So given the growth in both of these, I think it's an important vertical for us to grow and going forward, and that's why we've established a separate diagnostic vertical, as you can see.
Okay, thanks, Mr. Kadambi, for that sharing on how the laboratory business or section is run under the IHH group. We move to the next question now from Mr. Daryl Lim. He would like to ask, can the management share the target revenue split according to geographical region based on the current financial results and based on maybe say in the future in 2028 where we intend to go to 4,000 bed, will there be changes in the revenue contribution from the different geographical region?
Yeah, first of all, again, great question, Mr. Lim. I think if you look at our current geographical split, as I mentioned, Singapore is the largest, followed by Turkey, followed by Malaysia, very closely, followed by India. And then, you have Hong Kong, China, so on and so forth, right? And what happens if you fast forward it a few years forward? Bear in mind, if you look at the slide that, my colleagues had shared with you in terms of our organic growth plan, we are growing across all geographies, not just, Singapore or not just Malaysia, right? We are going across all geographies in a very planned and meticulous manner. So over the period of time, I do think that our revenue contribution from some of these geographies would probably tend to be the same based on our overall growth plans that we have for each of these countries.
Okay, thanks for that answer. I hope that will answer Mr. Daryl Lim's questions on the revenue contribution from the different geographical region. The next question is from Mr. Huang, I believe. So this his question is, among the countries that you operate, do you rank in each in terms of growth? I think you shared about the revenue contribution with Singapore being the biggest contributor. And are there any local regulatory challenges that the IHH group is facing in the countries that you're operating in?
So in terms of, I think the first part of the question is something that I answered already. So in terms of regulatory challenges, healthcare is, I would say joint in the hip with the local administration and the government. And across all the markets that we work in, we very, very closely work with the government. And I would say, a pandemic like COVID has made that bond stronger in all the geographies where we operate. And we look at, always partnering with the local administration, with the local government, because healthcare is a very important topic, not just for us, but also the local governments and the administration. So we partner with them very well, and we build a business together in each of these countries.
Yes, I believe that is very apparent, especially during the COVID period where we observed in the previous few years. So I would like to expand these questions a little bit. Besides regulatory challenges, what are the key challenges that the group foresee going ahead into 2028 when executing the organic growth plan? What are the key challenges that investors need to take note of in the healthcare sector as well?
Look, that's a great question. So the challenges are, I would say one of the biggest challenges that probably keep most of us up at night is the nursing shortage globally. It's not just Singapore or it's not just Malaysia, but globally, if you look at the biggest shortage, it's a nursing shortage. We have close to about 10 million shortage globally of nurses, and that's why you see high attrition in nursing as well. Right, so that is something that is a big challenge for not just us, for every healthcare operator. Why are we placed better? This is one thing that you must bear in mind. As I mentioned in the beginning, all our brands, whether it is Fortis in India or whether it is Gleneagles or Mount Elizabeth or Pantai in Malaysia or Acibadem, we are market leaders. So finding replacement and finding new nursing staff who want to join the workforce will be a lot easier for us compared to some of the shops that are just one hospital or two hospitals, right? So I think that's how we alleviate the nursing problem to a great extent. The second is also because we've done this for many years. IHH is no new group. We've been probably listed for 12 years, but many of our hospitals have been in existence for 40-50 years already. So it is in the DNA of our administrators to know how to fill a nursing gap. We've also done various ways of ensuring that we let our nursing staff focus on pure nursing work, meaning to say, if there are things that the nurses don't need to do, for example, doing something which is not patient care, but let's say stock count, counting of stock, that is something that you don't need nurses to do. You can have other people doing it. So we've substituted and released nursing bandwidth to do patient care. So that's the other way we handle a shortage of nurses over the years.
Yes, I think that's a very real problem. Even in the news locally, we have already been seeing that there's a shortage of nurses in our hospitals, and we have been hiring them all over globally as well. And the step to take that to lighten the nurses' workload away from the administrative, the stock take, is definitely going to elevate the situation somewhat a little and help to get IHH a little edge over the manpower or the medical professional hiring issues. Let's move to the next question from Mr. Lai Yong Chang. IHH has historically been an active acquirer of healthcare assets. Given the current economic climate, how is the group prioritizing its expansion plan? Are there specific regions or segments where you see significant growth opportunities?
So I would say as if you go back to the slide which talks about our key growth strategy, the first growth is really from organic brownfield expansion, right? The 4,000 beds that we are talking about are 90% of that is all brownfield. What do I mean by that? What I mean by that is these are expansion of existing hospitals that are already full, or addition of beds in some way or form in hospitals that is already full, where we probably have space, right? So that is what we're doing. So that is the most important form of growth for IHH at this point in time. And why is that the most important form of growth? It is the most important form of growth because it is the easiest way to deliver care, but more importantly, also shareholder return. Because brownfield expansions are expansions that are value accretive, that ramp up faster. We already have patient flow. We already have equipment as well. All we need to do is add beds. So that is the fastest way to deliver shareholder return from a growth perspective, where we see there is a need for beds, right? With regards to our acquisition, yes, we definitely look at acquisitions. We have grown through acquisitions, but we are also equally disciplined about the acquisitions that we do. So when we look at acquisitions, there are certain criteria that we look at to ensure that it makes sense. One, we want to acquire those assets that make sense from on a standalone basis. So any asset that we acquire must be a great asset on its own, number one. Number two, if we are acquiring an asset within a country that we operate in, it has to fit well within our network and add value to our network. So that is number two. Number three, we also want to see that there are synergies and value that we can create from the acquisitions that we do, right? What do I mean by synergies and create value? What I mean by it is, let's say, putting the procurement team together, maybe buying more for cheaper, right? Things like that. So we have to create value in the acquisitions that we do. That is number three that we look at. Number four, it has to be EPS accretive within the first 3 years. If it's not EPS accretive within the first 3 years, then we would not even look at it. So those are the key guiding philosophies that we look at before we do any acquisitions, going forward as well.
Hey, thank you, Mr. Kadambi, for that very detailed explanation on some of the growth plans and how you're going to execute that. I have an extension questions on the ACE framework, the growth plan. You are looking at turning around some underperforming assets. Has these assets been identified? Any valuation of that or market valuation? And by diversing, how will that affect the financial performance of the group that we are looking at?
Sure. So look, we do have, as I said, we do have certain smaller assets that still are probably not performing to its optimal, and we have identified those assets. We have a clear plan, and some of them have been executed already, and we are seeing probably positive uptick as and when we implement some of these plans as well. So simple answer to your question is yes, we've identified those assets, and in many cases we've started implementing action plans as well for those assets.
Thank you. That's really very assuring to hear that of the turnaround of the underperforming assets. Let's move back to the Q&A question. The next question from Mr. Huang. Would you like to comment on the China and the Hong Kong market? How are they performing and what is their growth outlook like?
Sure. Hong Kong is an asset that's performed exceedingly well. It is a 500-bed hospital. Bear in mind, this is one of the few private hospital licenses that were issued in Hong Kong. So it's a 500-bed facility, out of which we have already opened close to 300 beds. And as you know, hospital is always ramping up in phases. We don't open the entire 500 beds at one go, right? So we've already opened 300 beds, and Hong Kong again has a double-digit growth in terms of revenue, in terms of utilization. So Hong Kong is doing exceedingly well, and there are new therapies and new doctors who join us every day. And there's huge momentum in Hong Kong for us, right? Being one of the few private, private hospital licenses that have been issued. China is relatively new, so we are currently present in Shanghai alone. We've had some clinics in Shanghai, and a hospital that we've just opened. We soft opened the hospital last year. So it's, I would say just about a year of operations in China, in Parkway, Shanghai, which is the hospital. Ramping up, slowly, but we will probably get there over a period of time. So it's a new market, but, we're slowly ramping up in China as well.
Yes, it's a very big market, and also looking forward to IHH expanding over there to one of the greatest market in Asia. So we have a next questions coming from Mr. Lai Yong Chang. How is IHH integrating ESG factors into the business strategy, and what are the key targets and initiatives for the coming year? I think that is related to your sustainability slides that you mentioned just now.
Sure. So, look, as I mentioned, we have, our 4 pillars, right, of ESG that we just spoke about. And across the 4 pillars, there are very, very specific targets that we've laid out, right? And some of those targets we've actually also mentioned in the slide. We showed in the slide how we've picked, key targets within those 4 pillars, and we are focusing on delivering those, right? For example, I can give you one example. If you look at patients, right? We said, look, for patients, we need to ensure that we have a reasonably good estimation of the bill. We don't want any shocks to the patient in terms of what was estimated versus when you discharge, what happens, right? And that is something that we track as part of our sustainability journey, very, very carefully. So that is something that we do. The other one is value-driven outcome. I spoke about value-driven outcome, where we look at a similar procedure across all our key markets, and we look at best in class, both in terms of clinical excellence as well as consumption of material. And then we benchmark to ensure that our clinicians also know how they can do better by the patient, year on year, procedure on procedure, right? So again, that's another initiative. So we have several such initiatives across all our 4 pillars, and we track it. So if you go to our website and download our sustainability report, it clearly outlines our key KPIs and the progress that we've made in each of these KPIs.
So these KPIs are the metrics of measuring the ESG efforts. One of them is the net zero by 2050. And also you have the people pillar, which you did a survey on your staff and employees, which has a very well response. And you mentioned that you intend to increase this nursing talent by 5.6%. Is that through hiring, or is that through like partnering universities to increase the output of nursing graduates?
It could be many, right? I think, look, people are our big assets. In IHH, it is stated that we have to take care of our people so they can take care of patients. And frontline staff like nursing is very, very important, right? So it could be various things. It could be education, nursing colleges. It could be sponsoring some of the people to have the ability to go to nursing colleges. It could also be, in many cases, as I said, freeing up nursing time. So it could be various, it could be a magnitude of things. But yeah, basically, nursing is a very, very important part of our business. And, we need to ensure to see how best we can take care of our people for them to take care of patients.
Okay, so any key ESG metric which you would like to highlight beside the net zero by 2050?
Sure. So, as I said, we have things like, 90% of our, video outcomes. So as you can see on the slide, we've already highlighted, two categories in each of these pillars, right? Let me just share it with you. Can you see? Yeah. So as you can see, for each of these pillars, we have highlighted some of the key matrices. And, we track each of these, and we track them quite seriously. It's not just, being net zero, but, for each of these pillars, there are specific KPIs.
Okay, thank you for that. I think this slide will really be helpful to track the ESG and sustainability effort of IHH Group. Okay. Yeah, thank you, Mr. Kadambi. And next, let's move to the next question from Liao. I guess it's Mr. Liao, SM Liao. IHH plan to increase hospital beds. How is IHH planning to satisfy the staffing requirement while balancing costs when there is a shortage of nursing resources? I think as extension of this question, do you see the compensation of medical professionals or nurses going up tremendously, or is that going to be an increase that can be managed? That is I think the essence of the questions.
Sure. So as I mentioned, nursing is a worldwide problem. I mentioned that the last estimate was about 10 million nurses, which is probably the size of a couple of countries put together. So it is a global problem. It is not just a problem of IHH. However, as I also mentioned, that we are very well placed because of the quality of brands that we operate. We are the employer of choice. You see from many nursing schools, people wanting to join us, because of that. We are an employer of choice. There is also, in some cases, mobility for nurses to move within our network, right? So, which again entices nurses to move. There are various retention plans that we have for all our employees to build, a workforce that stays for longer. And there are various talent development programs as well, wherein you can start as a nurse, but you can become. We've seen cases where nursing staff have become hospital operators, hospital administrators, so on and so forth. So there are various key things that we do in order to address the nursing shortage. That's how we've grown over the years. So we are one of the largest. We have 12,000 beds currently, over 12,000 beds that we operate. And I'm happy to announce in Singapore, previously, obviously, we had nursing shortage, which was not a secret. We openly mentioned that we had block beds because of shortage of nursing staff. But I'm glad to announce, because of a lot of measures that we've been put in place, we are fully resourced in Singapore, right? And likewise, we are putting a lot of measures in all our countries to get to a place where we are able to address this problem proactively.
Yeah, I think this is a problem that is very real to all the hospital operators, and IHH is really well aware of this problem and taking a lot of steps to address it, so investors could be rest assured that this is taken care of. We still have about 5 more minutes and 5 more questions. So I'm going to kick the gear up a little bit. The next question from Mr. Huang: what kind of AI initiative is IHH currently undertaking to improve healthcare?
Sure. So AI is used for various things, right? So I can talk about let's say 2 separate instances where we use AI, right? One, I can think about various initiatives that we do, whether it is AI bill estimator. We just spoke about ensuring that as part of the sustainability journey, having a bill estimate that is very close to the actual bill. So how do we do that, right? There are so many cases, so much of complexity within case to case, etc. Right? How do we do that really? Right? We do that using artificial intelligence and generative AI. Right? So that's one use I can think about. We also look at innovation in a different manner, not necessarily AI, but we look at innovation. Right? We've invested in some innovation companies as well, where we think we can partner with them and bring a new horizon of medicine and show, and basically bring clinical leadership to some of the world's problem today. Right? We recently invested in a company called Lucence, which is a liquid biopsy company. What does it mean? It means, unlike earlier, where for cancer detection, you need to go through certain specific diagnostic tests, which are expensive. In this particular case, we could do that by just draw blood. Right, so that, again, very innovative, very futuristic, but we are taking steps to ensure that we partner with companies like that, so that we can adopt technology and bring it to our patients as well.
So I just want to double check. Did I hear correct? So that means this technology can help to draw blood samples from the patients.
Basically, so earlier, if you look at cancer detection, right? cancer detection, you would have to go through a series of tests which are probably not lab orientated, but I would say imaging tests, so on and so forth, to detect cancer, right? Which are expensive as well. So this company has been a leader and has a product which which can detect cancer by just drawing of the blood. So like the way you go to a GP clinic and draw blood for doing a full blood count or doing a sugar test, right, or diabetic test, you can just draw blood and you can detect whether you have cancer or not. Rather than go and do a what do you call a biopsy. What do I mean by biopsy? We're actually doing an invasive invasive procedure to extract tissue from your body. Rather than do that, you can just draw blood and and the detection tells you whether you have a certain kind of cancer or not. So that's the cutting edge technology that's currently available, and we've invested in that company to really bring that to our patients across the world.
Okay, thanks, Mr. Kadambi. I think that partly answered the question that just came in terms of using new technology. And then this technology is really, I think, something that will help reduce the diagnosis time, and it's also less invasive as well. So we have a few more minutes, so let me quickly go through the last few questions. Any possibility or plans? This question is from Mr. Chua. Any plans for acquisition of any Singapore names? Not going to mention any names. Just like to know whether there's any plans for that.
We don't want to comment on speculation. There's all kinds of speculation. We don't normally comment on speculation. But in general, not specific to Singapore, but if you look at our overall platform, as I said, we operate in 10 countries. We evaluate many options across each of our markets time to time. And as I said, we have a clear framework in terms of looking at these opportunities and seeing whether it works for IHH or not.
Okay, thanks for the answer. I think we take one last question, and this is from Mr. Tan Chun Lai. He observed that IHH CAGR of 3.8%. Do you foresee the CAGR for IHH to increase further into the next 5 years? Is there a trend that we are looking at?
Not sure about the 3% CAGR, but in general, as I said, we've shown double-digit revenue growth, as well as profitability growth over the years. And obviously, as I said, we are focused on ROE, and we are focused on shareholder returns, and we continue to be focused on that.
Okay, I think this is in line with what Mr. Geoff Howie shared earlier on the healthcare sector, growing demand as well for all the other players in the healthcare group as well. So Mr. Tan will be able to draw your conclusions from this information that we shared earlier. So lastly, I would like to thank Mr. Kadambi for your insightful sharing tonight. We hope all the audience and viewers found this Corporate Connect session very informative and useful for your investment journey. So if you have any questions, do feel free to visit the company website at ihhhealthcare.com. You can also look under the investor section for their stock information as well as their latest corporate and financial announcement. So for any investors relation queries, you can email ir@ihhhealthcare.com. In case you missed any part of today's session, you can rewatch this webinar on SIAS Facebook and YouTube channel. So Corporate Connect is our monthly webinar. So do visit the SIAS website to get the latest updates on our upcoming investors education program. The next Corporate Connect session will be on 6th August featuring Lendlease Global Commercial REIT. You may type in the chat box to let us know which listed company you would like us to feature next. And lastly, I would like to thank everyone and Mr. Kadambi for joining us this evening. Take care. We look forward to having you back, and everyone have a good night.
Thank you all for joining as well. Really appreciate all of you joining at this late hour, and look forward to many more such sessions. Thank you.
Thank you, Mr. Kadambi.